everyone? My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 11th, 2021. Happy Veterans Day. And Bitcoin is looking like it's in a complex correction. It's looking like it's just hanging out. It's literally just stalled, okay? And that is a great indication. That is sort of proof that it's in these complex corrections. This is exactly when you see price not move forever, because that's what a complex correction does. The reason for a complex correction fundamentally is to give buyers and sellers the opportunity to trade, okay? Especially after a precipitous drop or a parabolic rise, okay? And so we recently had a precipitous drop of, let's see, 7%. And now Bitcoin's kind of hanging out like, hey, let's settle down. Anybody who didn't have a chance to sell, you can sell. Anybody who didn't have a chance to buy, should you like to buy, you can buy. That's basically what a complex correction is, right? So I've been babysitting this trade setup for quite some time. And just on the subject of trading, I know one of the community members yesterday left a message saying that they had recently been liquidated of quite a large sum. And, they blamed me for, making mistakes and calling, the top, saying it wasn't going to go past 66 and so on and so forth. And my response, and I want everybody to kind of understand, like, first and foremost, it breaks my heart to hear that, any of you guys get liquidated or any of you guys lose money. I understand this is a risky business. This is a risky market. It's volatile. There's a lot of risk, but a lot of reward. But please, please, please manage your risk. Please, please, please use a stop loss. And even if you do use a stop loss, know that you can still get liquidated if you don't have enough to cover your execution fees. This channel is primarily for educational purposes. I have never and would never give trade signals. And please understand that if I were to give you trading signals, I would not only give you an entry point, I'd not only give you a stop loss, I would not only give you a take profit point, but all of those would be dependent on your exchange, okay? Because those things would be exchange dependent enough to affect, where you want to hide your stops or where you want to enter and all that stuff. So trading's another monster. I've lost a ton. I've lost thousands. I've made thousands, right? I'm very serious about trading. This is why you hear me talk about trading quite a lot. It's one of the hardest things I've ever done, but one of the most rewarding things I've ever done. It literally takes everything from me, my mind, body, and soul. It requires physical endurance, mental endurance, psychological, spiritual kind of fortitude. And so it's not something to be taken lightly. Please, just to keep it short, as a short word of advice, if you're looking to trade, use my referral or somebody else's referral. Take that referral money, the bonus money that they give you, the free money that you can trade with, and trade. Make mistakes. Make all the mistakes you want. Or if you want to fund your own account, fund it with just a few bucks. $20 here, $30 here. Trust me, if you're decent and you can trade, those $30 can turn into 90, can turn into 300, can turn into 1,000 quite quickly, right? Because the gains can compound quite quickly, depending on your trading style, obviously, and depending on, everything that you're doing. But just because I say Bitcoin's going to drop, it doesn't necessarily mean that you can take out a leveraged trade at a certain point. There's so much more that goes into trading. So much more. It would take hours and hours and hours and hours for me to share the little I know about trading, right? And how I've managed to be profitable, even, when I get stopped out, right? And I just did get stopped out this morning, and this is what we're going to talk about, right? So let's segue into what Bitcoin's doing. This is why you're here. Everybody said it's impossible. Bitcoin's going to the moon. Why would we ever correct. We just hit a new all-time high. But if you're subscribed to the channel, you'll know it's all about price action, not necessarily price. You can make all-time highs all you want. It depends how you make them, okay? And right now, we're in a downtrend. Right now, we're looking like we're going lower, substantially lower. This ABC correction is just the beginning. This ABC correction has a terminus of 55K. We zoom out, you all know, if you're subscribed to the channel, we anticipate Bitcoin to complete this larger ABC correction, okay, which has a terminus way, way lower than 55K, all right? This is not a bad thing. People like when the price goes up, but how do you think the price goes up so parabolically? It's because it also goes down quite a lot. That is the definition of volatility. It goes up a lot, it goes down a lot. But in an appreciating asset, it goes up more than it goes down over time. This is why Bitcoin is a good store of value. This is why Bitcoin is a great performing asset, right? But it doesn't necessarily mean that it goes up only, right? And that's also one of the hard things about trading. Even if you know that the price is going to go down, in the course of going down is going to go up and down and up and down and up and down and up and down. And I'm going to show you an exact example of this. All right. So right now we're in the C wave. What does that mean? The C wave is impulsive, right? According to Elliott wave theory, the A wave is corrective ABC, the B wave corrective ABC, right? The C portion is all obviously impulsive. You see all those green candles. The C wave, obviously impulsive, all those red candles, right? It's uniquely red on the 12-hour. Now, the C wave is all impulse, except for the small corrections, the intermediary corrections in the waves, right? The 2 and the 4 wave, it's all impulse. That's why you get this big candle in no time, right? You got this big red candle in, that's 9%. It was a 9% drop in very little time. You pretty much got 9 from here. Boop. Stay with me. I'm here. You got 9% drop in 4 hours and 15 minutes, okay? So that's what we mean by saying impulse, right? The impulses up or down are going to be quick. They're going to be very, very sharp, okay? And after the impulses, you get your corrections. This is what we're in. These corrections take some time, right? They take a while, right? 4 hours and 15 minutes, we got 9%. In 19 hours and 30 minutes, we got all of what? We've basically been stagnant. We've been ranging, okay? We've been ranging within, 1-2%. And that's the difficulty. But once you know the anatomy of this, you can trade these things, right? You can make entries and exits very quickly, and we're not going to be too precise right here because just because I'll explain it in a second. This is the 2 wave, very clearly, very obviously. This is 2 wave. This 3 wave that's coming is going to be the most impulsive, the most drastic, the most intensive wave down in this ABC correction. And then you're going to get a 4th wave. It's probably going to be as simple because 2 was complex and took forever. And then you're going to get a wave 5. All right. And that's pretty much it. So once we know, we have a general map of what Bitcoin's doing, where it's going, then we can trade if we choose. But then even trading, you have to come up with a strategy. You have to have a good way to enter and all that stuff, manage your risk and all that. But that's pretty much what Bitcoin's doing. And here, we can also confirm this is a 2 wave. How? So what do we know about 2 waves? That they retrace from between 50 and 61.8% of the 1 wave, and they can retrace as little as 38.2. So what do? We pull the fibs. We use our Fibonacci retracement tool from the top of this wave, which is here, to the bottom, which is there, and we see that the wave has retraced only between the 382 and the 0.5, okay? So we know technically it could go down now and it would be a sufficient retracement, but it's likely that it go up at least to the 0.5 and the 618 because probabilistically most two waves retraced within this region. Okay, so that's one thing. Second thing is, what do you make of all of this noise? Okay, this is tough. This is tough to trade. This is tough to enter on, right? You want a confirmation. My best ways of, and this is just kind of trading tips, right? My best entries on shorts in two waves is when I snipe the 618. Why? Because I know for a fact that price cannot retrace beyond the 618. It can wick maybe slightly. So I usually put my stops right above the halfway point, right below the halfway point of the 618. Okay. And so I know that this is my trade plan. I have a larger kind of, I have a larger thesis of where price is, what it's doing, and I know that my stops can hide behind this Fibonacci level, and it's typically respected. Okay, and I know that if I do manage to hit this price at 618, I'm not worried about anything else, right? But that's just assuming that price goes all the way up there, right? So that's pretty much it. I wanted to show you this complex correction. So what do you do with this? When is it over? Okay, what do we know about complex corrections? We know that we have two types of complex corrections, a double three and a triple three. Now, complex corrections are complex. Obviously, they live up to their name, but we simplify them by saying double three and triple three. What does that mean? We mean that to say a double three is when you get two three-wave patterns, and in between those two three-wave patterns, there's an X wave, okay? And then a triple three is when you get three three-wave patterns, and in between each of those three-wave patterns, you get an X wave. So you get W, X1, Y, X2, Z for a triple three. And then for a double three, you get W, X, Y. W is the three-wave pattern, X is the middle, Y is the next three-wave pattern, okay? Tricky part is, and I've said this before, you can get either a zigzag or a flat for W, a zigzag flat or triangle for X, a zigzag flat or triangle for Y. And you can get within Y and Z, you can have complex corrections as well. So it just boggles the mind. The number of permutations of possible things that WXY and WXYXZ complex corrections can look like is, it's crazy. But what you will find is that they slant upwards like this. Do you see that? That is telltale of a complex correction. That's how you find them out. They slant upwards. They always slant upwards, okay? And so if you see a slanting upwards kind of channel in a complex correction or in a correction, especially in a two-wave or in a four-wave actually, you know that it's probably a complex WX or WXY or WXWZ, okay? So I encourage you guys, read up on this. The more you know, the more you make. If you really want to master charting, most of the time price action is hanging out in these complex corrections. It spends most of its time there. It spends very little of its time doing this cool stuff, going up really quickly or going down really quickly, right? Most of the time it's spent doing this boring stuff, but this is where you make your money. This is where you kind of figure out the puzzle of what the price is doing and where to enter for the next big move, right? To take advantage of these gains, either shorting or longing. Do you see what I mean? Okay, so let's break this down really quickly for the last part of the video. If this is a complex correction, right? What's this look like? This looks like an A wave. This looks like an A wave. Okay. A, B, C. This looks like an ABC. Okay. An A wave. This looks like a, let's see, 2, 3, X, 1, 2, 3. This looks like a double 3. And then this looks like a it's got a slant upwards. I don't know what this is. I have a feeling that this is going to go upwards a little more because of these wicks here. I know I'm only on the 15-minute chart, but these wicks are showing heavy buy pressure. So I think we're going to get something to the upside here. But, it's very difficult to read these complex corrections. But like I said, my best way, the most, the easiest way to enter, let's say you want to take advantage of the next move to the downside, the 3-wave, which is going to be the real big money maker here, is one, we touch the 618, definitely going to get rejection here. If this is a 1-wave, then we can't exceed this level. So that entering here is the best entry you can possibly make. 2, you want to use the EMAs, okay? You want to use the EMAs on higher time frame and see where the EMAs are rejecting or will reject price. So you see this 55 EMA, this blue, and then you can look at the stochastic RSI when we're topped out. Then you can carefully track the price, babysit it, and see if it's showing signs of reversals. If then it's showing signs of reversals, it's getting trapped under the EMAs. You then look at the corrections and you see that looks like it's going to go up here, okay? Once it comes up here, just look at the stochastic RSI, look for some toppishness, some overbought kind of price action, maybe between 90 and 100, right? And then you can make your entry, put your stops behind the 618, and then let it ride all the way down. And what would be your target? And again, this is not, don't trade this and say, hey, Dean, you told me to trade. No, this is what I'm going to do. And I'm just sharing this with you. Trade at your own risk. Please be careful. Use proper risk management, right? That's all trading is. Until you make a lot of money, it's all about how little you lose, not how much you make, okay? So, the target for this would be simply, let's be conservative, right? You do not want to overestimate your targets, because if you do, then you lose all the profits you made because the price runs on you, okay? So what you want to do is you want to take this 1-wave, and let's say that it would come up. Let's go into the 45, or let's go into the hourly time frame. Let's just say you take the 1-wave and price goes up all the way here, right, to this blue EMA, and it gets rejected here at the 55 EMA. And let's just check really quickly what that would be if that's between 0.5 and 618 of the 1-wave. And it's right at the 0.5. Let's say we get rejected at the 0.5, okay? I think we're going to breach the 0.5 a little bit. I don't know. That's just my sense. Let's just say it's here. Okay. This is an estimate, obviously, because you would have to wait. Trading's a waiting game. You literally sit there and wait for 19 hours, just, waiting for the setup to take shape. Because right now, you do not know. It can go up. And so if you enter the short now, you get stopped out. Trust me, I've done it before many times. All right. Your target, your conservative target for the 3-wave is 1.618, right? Because 3-waves typically go between 1.618 and 2 of the 1-wave. However, and basically to do that, I took the Fibonacci extension tool, went from the beginning of the 1-wave to the end of the 1-wave, and then the retracement of where I think the 2-wave will end. Now, the 1.618 to the 2 is where it typically ends. So I typically take profit at the 1.618. So I'm expecting Bitcoin to go down in this next leg to 55, 56K, okay? Now, 1-waves can also retrace to the 1, but that's the minimum retracement. Or sorry, did I say 1-wave? 3-waves can retrace to the 1, but that's the minimum retracement. We seldom ever see that, okay? So that's basically what I'm seeing with Bitcoin today. I hope this was helpful. I hope this was useful. Like, share, subscribe, and I'll see you guys tomorrow.